Good morning. I'm Brownfield anchor reporter Megan Grebner. With us, as always, to talk all things markets. Just a day late today is University of Missouri Scott Brown. Good morning, Scott.
Good morning, Megan.
I have to apologize. We're a day late. I was traveling yesterday, coming back from our National Association of Farm Broadcasting annual meeting. So that was on Friday. And you graciously accepted my invitation to join me this morning so I could get home, which happened about 3 o'clock this morning. So thank you again. And I look forward to talking a little bit about cattle on feed numbers. There was also some legislation introduced this week to talk about bans of Brazilian beef. But to get things started, let's recap what happened this week in the markets.
Yeah, Megan, this week on the cattle side, cash-fed cattle were $1.60 higher for the week. Those feeder cattle auctions were anywhere from steady to $3 higher this week. On the future side, the December live cattle futures contract closed up $1.75, and the January feeder cattle contracts up $3.75 this week. Had weaker choice box beef this week, down nearly $6.70. That actually puts that choice box beef price only $45 over where it was a year ago. A lot of weakness in ribs this week in that choice box beef. On the hog side, cash barrel gilt prices were down $2.25 this week, and the December lean hog futures contract closed down a little more than $2 on the week. The pork cutout value lost $4.20. Again, some weaker belly prices led the way for that pork cutout value to move lower.
Scott, we've continued to see a pretty strong slide in cash hog prices. Do we anticipate this decline continuing, or could it possibly maybe stop and we maybe start to see some things climb back up?
Well, so I keep hoping we're going to see a turnaround, but we've certainly had several weeks here where we've been talking about lower prices. I continue to say when you look at the supply side, we're not in bad shape. We're making reasonably big runs here, but of hog slaughter, but still the fundamentals in my book are still positive on the pork side. We just keep seeing these cash prices, however, floating lower now. Again, we were coming off of some pretty high prices, especially after the last Hogs and Pigs report. That's what we've been sliding down off of was some pretty lofty prices after that report was out.
Scott, let's talk a little slaughter numbers as we take a look at those. How are those holding up week to week, and really as we look compared to a year ago?
Yes, so some big runs according to USDA this week. So for the week ending November 20th, 677,000 head of cattle to be slaughtered this week. That's up 22,000 head from where we were a week ago. And when we look at that year-to-date number, cattle slaughter year-to-date up 3%. On the hog side, a run of 2.635 million head of hogs this week. That's 21,000 head above where we were a week ago. However, still below the 92,000 we slaughtered a year ago this week, leaving hog slaughter 2.1% year-to-date below year-ago levels.
As we go into this last month of the year, last month and a half of the year, how do we anticipate hog slaughter numbers looking? I mean, typically we see an increase this time of year. Or are we going to kind of hold where we are right now?
Yes, I don't see a lot of bigger runs coming than where we sit right now. And I think it's maybe a little bit hard to get as big a runs as we would have seen a year ago as well. We're just not really set up with some of the labor issues that we continue to see in those slaughter plants on the hog side. So I think we're pretty much near where we're going to peak here between now and the end of the year.
You mentioned labor, and I saw you earlier this week. You were part of a panel discussion talking a little bit about slaughter capacity in the livestock sector in general. And we talked a lot about cattle. When we talk about these labor concerns, how much does that maybe increase the push for automation, and what does that potentially do to processing, but also to prices and our ability to move numbers through that chain?
Yeah, so I do think the investment in automation will continue to happen, especially given how tough it is to find labor in some of these plants. To me, that's a longer term issue. We're not going to fix many of these bottlenecks because of the lack of labor quickly with automation, but there's certainly going to be the push, I think, to move to automation. We might find ourselves again adding costs to the slaughter of hogs as a result of some of the technology that we might apply. I still think this automation takes time just because, well, for hogs, we might be talking about fairly consistent carcasses that are hanging there, but not completely consistent. You know, we see probably a lot more automation in the chicken side of the industry right now in terms of slaughter, but for hogs, I think we still have work to do. And so for me, this automation comes probably from both sides of we've got to have more consistent carcasses and we've got to have better automation to allow for some deviation in carcass as we go down the line.
Big report this week, cattle on feed numbers. It's the only one we have to talk about. As we take a look at these numbers, it looks like it was pretty much in line with pre-report expectations.
Yeah, Megan, we were pretty much spot on this month. Those pre-report folks right on top of USDA. So on feed as of November 1 came in at 99.8 of a year ago. That was almost just 0.1% below the midpoint of pre-report estimates. We did place more cattle on feed in October. It came in at 102.4. For me, we knew we had some strong feeder cattle sales going on in mid-October, so it's not surprising to see that up. I keep saying part of that might be some calves that got off of some drought-stricken areas of the U.S. maybe earlier than normal. That pushed us a little higher in October. So all in all, a cattle on feed report that to me gave us no bearish tones for the market.
Sometimes just a normal month or a non-exciting month is okay, I'm assuming.
Yeah, I think we'll take it just given all the volatility. You know, it's interesting you bring this up. I keep saying, you know, it's amazing what we've come through in terms of just the sheer amount of unknown and volatility that we faced and how resiliently we've done it in many cases. Yet I think we're always just waiting for the next shoe to drop now. And do we find ourselves back to hopefully something that might look more normal or at least less volatile than we've been through? It's hard to call for that when we've had black swan after black swan events happening, but I look forward to maybe a little less of this uncertainty looking forward.
Who's to say what normal is anymore anyway? I mean, we always talk about like this return to normalcy, and I've just decided that with toddlers, I don't even know what normal is anymore. So I expect that with markets as well. Maybe toddlers and markets are a very good comparison.
Megan, I just decided maybe I've gotten old, so what used to be easy to digest, I'm not as excited about volatility any longer.
Understandable. Before I let you go, I think some interesting pieces coming out this week. We saw late Friday, so like a week ago, late on Friday, NCBA came out and said that they wanted USDA to halt imports of fresh Brazilian beef. U.S. Senator John Tester of Montana introduced that legislation this week to support that. All three cattle groups came together and supported this type of legislation. Talk to me a little bit about, obviously we're concerned with BSE issues and the lack of consistency in their abilities to, I guess their comparison to like our USDA, right? So Brazil's form of USDA and their food inspection. But what does this do on the global market also? How does that all come into that mix and into play?
Yes, so I think it is important for us to understand that, you know, if we're talking about BSE cases, which we have seen in Brazil, that we're very quickly identifying those and figuring out strategy. And we've seen the Brazilians be somewhat slow in reporting to those trade partners, as well as the OIE. And so seeing us say, you know, we'd like to halt until we know more about how quickly they can provide us information. The last thing we want is for consumers in this country, or frankly anywhere else in the world, to be concerned about consuming beef because of BSE. We know we have could have issues there. So it is important, for us here in the United States. We had imported a little more than $60 million of beef and beef products from Brazil for the first 9 months of this year. So it's significant, but a drop in the bucket in many ways relative to overall supplies. For me, this is all about making sure that we keep U.S. consumers excited about consuming beef and not worrying about whether or not it might potentially have BSE as a result of Brazil being so slow in their response of cases.
Gosh, it's so interesting talking to some of the cattle folks this week just about how strong, and you and I talk about this a lot, how strong demand for beef has been in the U.S. And it's such a great story to tell on the beef side of things, not just for consumers because it's nutritious, it's delicious, it's but it's also great to support and to have support for providing support, I should say, for U.S. cattle producers as well.
Yeah, for sure. I keep saying that consumers, the behavior sometimes becomes cyclical, and we've been in just such strong demand pull for many of our beef products. The last thing you want is to somehow change or disrupt what's been a pretty positive period of time, and all of a sudden get into what's weaker demand for beef. You and I both know that's not very exciting for the industry if we head down that road. So we certainly want to ensure some safe products, safe beef products for consumers, just to try to continue to see that beef demand expansion continue for the next several years.
And they're starting beef demand young. I like the one favorite study from the checkoff with the American Academy of Pediatrics is beef is a first food. And when our boys we were just starting foods, beef was one of their first foods. And that study is really fantastic, but also what a way to shape the next generation of consumers. Start them early.
For sure. And again, I'll give this industry an immense amount of credit for developing products that consumers want. And it's changed the trajectory, I think, in many ways in terms of where this industry goes by the investment being made in putting better beef products in front of our consumers.
Scott, that'll do it for us this week. Again, I thank you so much for joining me this morning. So we could make the long trip home from Kansas City. What are we looking ahead to in this coming week's reports?
Yeah, so Thanksgiving week, we're going to get cold storage and livestock slaughter out next week for us to talk about, Megan.
And that should be a short turnaround for us because I believe we will talk on Wednesday of next week. So I will see you then.
Sounds good, Megan.
So have our weekly livestock market delivered to your email box every Saturday morning. Go to brownfieldagnews.com. You can also submit questions and comments there as well. Or if you're watching us on Facebook Live, you can also submit your comments and questions for Scott. And for all the great Brownfield podcasts, go to brownfieldagnews.com/podcast. Have a great weekend. We'll talk to you next time. I'm Megan Grebner for Brownfield.